Welcome to WFW's Transport webinar series, which is a collection of 8 episodes covering the key topics in the aviation, maritime and rail industries at the moment. Today's webinar is the first of 2 episodes covering rail, and we will be discussing the evolving rail landscape. Before we start, a couple of housekeeping notes. Please note that participant video and audio have been disabled to minimize interruptions. If you would like to pose a question or comment to any of our presenters, please use the Q&A function and we will either write a reply or respond during the Q&A session at the end of the webinar. Alternatively, you can contact the speakers directly following the event. Please note that the webinar will be recorded. I am Frederik, partner in the Assets and Structured Finance Group and based in Frankfurt. I'm joined by Olivier, Head of Asset-Based Finance at Société Générale. Since the end of 2008, Olivier has taken responsibility of big-ticket leasing in Europe for Société Générale, also called Asset-Based Finance. The team comprises of 10 front officers and is primarily active in Europe. Major recent transactions include advising Hermeva on the purchase of Raffles Lease last year, advisory and financing of Charles de Gaulle Express last year, and Eurostar advisory this year. Shaun Mills. Shaun was appointed as Alpha Train's Group CEO in September 2010. Previously, he held the position of CEO at Abellio GmbH, Bid Finance Director with Arriva plc, and Finance Director of the UK-based Great North Eastern Railway. Prior to moving into the passenger transport industry, Shaun Mills held a variety of senior positions providing extensive international experience and has worked in Germany for some 20 years. Shaun is a qualified chartered accountant and worked at KPMG earlier in his career. Bart van Horssen is Associate Director at Apex Rail. Bart has worked for 7 years at the Dublin-based leasing company of the Dutch Railways, where he was involved in the procurement, financing and delivery of several large-scale rolling stock projects in the Netherlands and Germany. In January 2020, he joined the Swiss-based rail finance advisory boutique Apex Rail. My colleague Alexia Russell, who is a partner in the Assets and Structured Finance Group, and Arnaud Troizier, who is a partner in the Regulatory, Public Law and Competition Group, both based in our Paris office. Alexia, let me now hand over to you in order to kickstart the discussion.
Many thanks, Frederik. So welcome to you all, and many thanks to our panelists for having accepted to spend this hour with us on the topic of the evolving landscape in the rail industry. I'm delighted to be moderating this session, which will be divided into 3 sections: liberalisation in Europe, the pandemic, and then, if we have some time, a Q&A session. So to start with the topic of liberalisation in Europe, Bart, maybe you could kick off and tell us what your view is on the liberalisation of the European market and the opportunities that you see for lessors and financiers.
Thanks, Alexia. I actually think the liberalisation of the European market is a very positive thing for lessors and financiers, as it increases their opportunities to finance and lease rolling stock to clients who are not state-funded and who cannot rely on taxpayers' funds or public sector balance sheets. I think for Apex Rail not being either of those two, it's also a positive development, as it increases our possible client base, given that liberalisation leads to more private sector operators who will need funding for their rolling stock. However, I think the liberalisation process is slow and often against fierce resistance of public sector entities, as they are negatively impacted by liberalisation.
Thank you, Bart. Olivier, from a banker's perspective, what is your view on the liberalisation of the European market and the opportunities that you see?
Good morning, Alexia. So effectively, I think the rail market is composed of various clusters, and each one of those clusters have a very different degree of liberalization. If you take, for example, the freight market, it has been open and a competitive market for some years now. The state and the EU need to further invest on the reliability of the network, of the robustness of the network, and work on the track access priority in order to help the cluster develop vis-à-vis the road transportation. If you look, for instance, on the open access rail passenger transportation, liberalization has only started in Italy for some years and just a couple of years back in Germany. It is expected to start in France and Spain again next year. And we believe that there should be some significant rail gains, rail market share gains over the plane on the distance up to 1,000 kilometers. These markets will go quickly, and as the high-speed train will replace airlines on these lines. Finally, on the regional passenger trains, Germany has been paving the way for more than 10 years on the liberalization, and now slowly France and Italy are opening up their markets. The first tenders have gone out, and we're very eager to see the outcome. And finally, on the light rail urban transportation, I think we're far from there yet.
Thank you, Olivier. Shaun, would you like to give the perspective from a lessor as well?
Yes, certainly, and thank you, and good morning to everyone. Clearly, I see it as a very exciting challenge in the years ahead. The fourth railway package is clearly the key driver to liberalisation in opening up the markets. And some countries have got markets which are bigger than others. And I think the speed at which the liberalisation process is adopted and encouraged will vary from country to country. Now, clearly, each country's incumbent operator naturally will try to defend their market share in each of those markets in every conceivable way. But my true hope is that economics will prevail over politics. And that, for me, is the big hope going forward. As already been said, I think France is going to be clearly the first country in focus, already some movements there, but other countries as well. And fundamentally, the key drivers are going to be passenger numbers, and the speed at which the non-incumbents can gain traction, so to speak, and market share. And so I see as a lessor a large potential revenue pool, large enough for several players to participate in and clearly assist in the liberalisation process.
Thank you, Shaun. Thank you to the three of you. Obviously, the reference to France is interesting, and we will be touching upon France as a jurisdiction specifically in a couple of questions. So moving on to the next question, how key do you think local authority support will be in attracting investment? Olivier, would you like to take this question first?
Yeah, sure. I think when we're talking about local authorities, we're primarily talking about regional or local or urban transportation. Here, the local authorities are the ultimate credit enhancer of all local transportation schemes throughout Europe, just because passenger never pay the full economic price of the service, and therefore the local authorities are the key decision makers. That being said, authorities react slowly because these investments are very expensive and they are very long-term. And today they are also very much impacted by the current crisis, as passenger traffic and fares, especially in France, have gone down massively. The subsidies that the PTAs have to offer in a COVID environment to the operators are massively more important than ever before. In some countries, PTAs do not have the means to pay for these losses and are requesting central state support. That being said, I think PTAs will continue their investments in newer, greener rolling stocks, but they've already started considering the impacts of the crisis because there has been some changes in the mobility means. So more bicycle, more home working. These changes will eventually mean that CapEx may be slightly different, possibly lower than initially anticipated. Yes, local authorities will be key, but the decision-making process is rather slow, and I do not expect anything in the very short term.
Thank you, Olivier. Shaun, would you like to give your view as well?
Yes, certainly. I think when we use the term local authorities, what I interpret that to be, as Olivier said, is that the PTAs, the passenger transport authorities, who award the concessions fundamentally on the passenger services. And I think their support is going to be critical, particularly in two areas. First of all, political support. There's going to be a political will to do this, but also I hope that the PTAs are clear in setting out clear, transparent tender rules. That's been my experience in Germany, and regulations which create a true level playing field for participants to play in the market. Having said that, I think I'd also make a plea that the PTAs don't over-provide extensive support mechanisms. That ends up in the public balance sheet, things like capital service guarantees, reuse guarantees, and even the PTA financing themselves and the pool solutions. And why do I say that? Well, it's because I think if you look long-term, you've got to allow the free market to operate and allow a secondary market. And if the assets are always within a moribund financing pool, owned by the PTA perhaps, that means they can't be moved around the country or even around Europe to move with the demographics. And that for me is a clear, important point in terms of the development of the markets, is the secondary market in the next 10 or 15 years.
Interesting, thank you. Bart, what's your view on this?
Yeah, I think a lot has been said already by Shaun and Olivier, but I definitely think I agree that it's with Shaun that the local authorities have to set the legal and commercial framework to enable competition, but then the true kind of competition that Shaun is talking about, and not where it ends up on the public sector balance sheet after all. What the authorities also have to look at is to make sure that they allocate the risks that are in a transaction to the parties who are best positioned to control those risks, in order to get the best economic outcome eventually for the public.
Thank you. Okay, so in any case, I think that just as a conclusion on this point, it sounds that the local authority support will indeed be key in different ways, and it's possibly going to be very different post-COVID than it was pre-COVID. So it's certainly, from my perspective, a moving part, which is also yet to be defined. So watch that space. So moving on to question 3, which is about liberalisation versus privatisation. What are we really seeing? So, for example, Belgium has just granted SNCB a 10-year concession to see how they cooperate with the regions. Another example is RATP that has set up a joint venture with Getlink to bid for French concessions. Is this really true competition? Will tenders be truly independent? That's the question, really. So, Shaun, would you like to be the first to respond to that?
Certainly, thank you. Yes, I think no surprises there, and I think, well, I hope that the 10-year concession granted to SNCB is clearly within the rules of the fourth railway package. So it's within the rules, hopefully. Whether it's within the spirit of it, it is a different question, which I won't answer. But I think, again, we should expect this to occur. I think the rules of engagement are going to be blurred in the initial phases of liberalisation in whichever country you are, and there'll be undoubtedly obstacles which are put along the way. And as regards my business, we've been in the German market for some 20 years now, and we've experienced these obstacles right at the start. So I would say patience and determination are required. But again, the whole purpose of liberalisation is to provide cost-effective and quality-enhancing services to the public. And I think those solutions which are offered by private operators will provide, let's say, compelling cases to what are probably now cash-strapped public bodies, certainly post-COVID, and that's increased the need for cost reductions, efficiencies, and also buying more services for less money, i.e. the quality aspect. So I think it's going to be a slow burn. I think these are obstacles which were visible in the German market as well. And again, no big surprises there. So I think there is a route through to liberalisation. Our industry is a long-term sector, and I think we need to look long-term and beyond these headlines, if you like, in terms of 10-year contract for SNCB. It will occur, and the free market will push it along, and economics will prevail.
Thank you, Shaun. Olivier, would you like to add anything to that?
Yeah, I think pretty much share much of everything that Shaun has said. I think we should leave aside for the time being the UK market, which is a different market, but here again we're talking primarily about regional passenger transportation, and it will become a competitive place. All the PTAs are trying to mitigate the increase of transportation costs because there are increases in passenger numbers, and at the same time they want to improve the service performance significantly, and we've seen that after 10 years or 15 years in Germany, that has happened. So there is a benefit from the liberalization. The EU guidelines are very clear, and we all know that it will drive towards more competition into those markets. Then what is very striking is that every country, every PTA may have a very different view or a very different understanding as regard to liberalization. UK, France, and Germany are taking at the same time some very different steps. Having Regioneo, as you said, bid against Keolis, SNCF, Arriva, Transdev, Trenitalia, or Abellio, or whoever, is going to be the usual way going forward. And one thing I'm not really sure, and I'm not entirely sure which way it will go, is we still don't know clearly who will be owning the assets into this new world. And there could be some very different answers from one PTA to the other, or from one country to the other.
Thank you, Olivier. Bart, would you like to add anything to this?
Yes, I think well, we seem to be here all in free market spirit, so we're kind of on the same line here. But yeah, I think that as long as the incumbent state-owned operators are not broken up at a certain point of time, or really forced to actually compete with private operators, that it will be very difficult to achieve a balanced competitive landscape. Luckily, the rules are developing more and more, and hopefully, in 10 or 15 years' time, what happened with the 10-year concession for SNCB will maybe not be possible anymore, and it will truly need to be tendered where they may be participating in this tender. I think if you what you see is that where there's state-owned operators and small-scale competition is allowed on their network, they will use the power that they have to basically try to stop the competition, or from privatization and liberalization being successful. To give an example, in Switzerland, the regions granted a few concessions to municipalities, so also eventually state-owned operators, but that caused SBB to go to court against these local operators to protect and maintain its own monopoly. In certain cases, using pressure methods that they have at their disposal, like threatening with job losses or ceasing to invest in trade stations to try to prevent this from happening.
Thank you, Bart. Well, I guess that brings us quite nicely onto the topic of France and the liberalisation, not privatisation. So to focus on French liberalisation, we are seeing the first tenders, which include services but also investment in maintenance centres. In parallel, infrastructure funds are building partnerships with operators, and lenders are wondering about the revenues of such concessions. So the question is, how do you see the cooperation between the usual suspects of the infrastructure world and those of the rail industry? Do you think it's possible, inevitable, promising? Olivier, would you like to be the first one to take this question?
Yeah, please. Actually, I'd like to step a bit back on the French liberalization, because it's been something that we've been waiting for a number of years. And as you mentioned, there has been some first tenders coming in, and we will see. We're very eager to see what the decisions of the PTA will be. So for the time being, we're not entirely sure, and we are very eager to see the way it will develop. What people need to understand is that all the regional passenger trains in France, for the time being, belongs to the regions. So it doesn't belong to SNCF, it doesn't belong to any other operator, it belongs to the regions. It's being operated and maintained by SNCF. And the tricky thing when you start opening up the market is to start isolating these rolling stocks that you will be needing on the new concessions, on the upcoming tenders, and you need to find all the required spare parts, which may be a difficult question, and you also need to find the maintenance workshops. So this is currently the landscape in France. The first answers from all the operators, and that's probably not going to be very, very positive for the lessors for the time being. The first answers from all the operators to the regions have been quite unanimous for the time being. And it has been, we want you, the regions, to continue to own the assets, and we will want to operate them more competitively and deliver a better service. But they want the regions to continue to own the assets. Workshops access, as you said, and constructions of workshops are going to be key topics, and it's not clear how it will go. Clearly, what we need to acknowledge is that none of the operators want these assets for the time being to be booked on their balance sheets. In some tenders, the regions want to reinstate some smaller lines that had been closed or that were going to be closed, and they want to operate them with lighter trains, and hence there will be some significant construction capex under these tenders. And it's quite normal from my point of view to have construction companies which are very keen to co-focus on these works to team up with operators for these tenders. And it's also very good for the operators because it's a way for them not to consolidate the rolling stock.
Thank you, Olivier. That's very helpful, obviously, your perspective. Shaun, would you like to speak to French liberalisation?
Yes, with a certain trepidation, given Olivier is in France, but yes, nevertheless. And I think to the punchline of the question, is it possible, inevitable, and promising? I think yes, yes, and yes is the short answer. The longer answer is I think there's a lot of uncertainty, and I guess the positions of each region, because each region is responsible or will be responsible for tendering, and I think some are pro-SNCF and some are less so, shall we say. So there will be a different pace and a different impetus from each region. I think, again, it's going to be a slow burn process. So as Olivier said, as a lessor, if the regions retain the pools, there are ways of keeping it off balance sheet nevertheless. So I won't get into that, but clearly I think the market will find its way. And ultimately, I think the level of demand and appetite from participants will dictate the success or otherwise of the initial tendering models. So I think mistakes will be made, as it was in Germany 20 years ago, and the tendering process and models will evolve over time. I remember in Germany the hot topic was, from the PTAs, the average number of bidders per concession. The lower the number of bidders, the less competition, and that has washed itself through the market as well. In terms of, I think, your question in terms of a combination of a concession with some maintenance centres and some infrastructure, I think from my point of view, and again, it will find its level, but if the concession with the infrastructure is too joined up or too vertically integrated, then ironically, again, it could actually stifle competition looking forward 10, 15 years, because we need liquid assets, train sets, that can be deployed across the country or even ultimately across Europe to match the changing demographics. And therefore having two vertically aligned concessions with infrastructure alongside, I think ironically could constrain that. And therefore I think we'll see a divergence of the pure concession, i.e. the operation of the rolling stock, and the other vertical integrated items such as maintenance. And again, with hybrids, the refueling stations is an issue there as well, whether it's battery recharging or hydrogen cells as well. So I think it's inevitable. The usual suspects, as you call them, I think will work together. There's an economic goal there, and so therefore I think, again, I think it's slower than we anticipate, but I think it's going to come.
Thank you, Shaun. Thank you. I will see if Arnaud, I don't know if you are able to talk at this stage, because it would be interesting to get your view as well on this question. No, we still can't hear you. No. Okay, right. Well, I think I suggest then
Alexia?
Yes.
Yes, you can hear me. Oh, so sorry about that. Yeah. Thank you. I just wanted to maybe to draw the attention on the what the role of the investment fund as well, and more particularly the investment funds dedicated to infrastructure. What we know is that they are familiar with long-term public projects, with concessions, and also with public clients. So they meet the number of this type of new concessions that we are seeing now. And what we have seen from the projects we worked with them is that they may have appetite for demand risk and work in various jurisdictions all over Europe. Based on the experience we have with them on various types of projects, and not only in France, we see that they may act as a catalyst between players with very different backgrounds and play a very active role in the structuration of bids and also in the management of innovative projects.
Thank you, Arnaud. That's helpful. The line wasn't fantastic, but we might come back to you afterwards if it gets sorted, just to have your view as well on the earlier question. So what I take from this is that obviously it's very, very early days in France. There's still obviously a lot of uncertainty. I guess with time, the role of the different actors will be clarified and may indeed be different depending, well, not only on the tenders, but also, you know, the scope of the tenders. So yeah, watch this space, but clearly it's going to be a long way to go. Very good. Okay, so I think we can now move on to the next section, which is this word which we hear all the time, the pandemic. So the first question I have on the pandemic is, how has your portfolio reacted during the pandemic, and what are your key concerns in the short and the medium term? Shaun, would you like to be the first one to talk to this?
Yeah, delighted to, yes. I guess in terms of my portfolio, just need to explain, I guess, that we've got around 850 train sets and locomotives. So we've got passenger operations, loco, diesel and electric, so quite a mixed portfolio across continental Europe. I must say the portfolio has been extremely resilient. Stronger than I would have anticipated back in March, April. On the passenger side, because we've got the long-term concession contracts there, I think it's fair to say no effect whatsoever, with no open access operations there, and so it's all concession based. Some slight delays in some new builds, but the timescales are long enough for us to catch those up. So really on the passenger side, I think it's fair to say no impact. On the local side, I think with our other lessor colleagues, customers have approached us for some rental relief, and we've come to some mutually agreeable terms to trade off some rental relief with some contract extensions and the like. And in terms of pure utilisation, which is the key measure, I guess, of how we are surviving through the pandemic, we've seen a very small 2 to 3 percentage points drop in local utilisation, which is pretty minor. And I think it just supports, if you've got the diverse portfolio, that really helps. Just a side note, in terms of the usage of the assets on lease, we've seen that the diesel fleet on locomotives has actually recovered its usage rates to pre-COVID levels, which is a very encouraging sign as well. And we've had no debt arrears, primarily because we've reached agreements with the operators. So I wouldn't say it's been a non-event. It's taken a lot of effort and a lot of contact with the customers to support them. And I'd like to think, you know, we're in long term and they see that as well. Key concerns in the short and medium term, clearly the big question is how long will the pandemic continue, and could it start to affect medium term to long term passenger numbers? I don't think so. I think there'll be a recovery, and therefore I think the PTAs will start to supplement fleets when the passenger numbers pick up. Longer term, I think there's possibly a benefit on local because I think freight has provided a degree of resilience and it's demonstrated its capabilities throughout COVID to maintain cross-border traffic, which hasn't been possible perhaps with lorries and flights as well. And I think that may have long-term a positive effect on modal shift, certainly from road, when we look beyond the COVID pandemic time.
Thank you, Shaun. That's a very full answer to the question. Thank you. That's really helpful. Bart, would you like to give your point of view?
Yeah, sure. Obviously, we are in a little bit of a different sort of portfolio situation than Shaun is, but I think what is the same is that it has proven to be all quite resilient. I mean, our revenues, the number of mandates and the deal pipeline that we're seeing hasn't been impacted significantly. And that is despite me joining the team earlier this year, which expanded our capacity, obviously. But still at the moment, we're very busy and have been very busy actually throughout the year when the pandemic started. And I think another additional benefit is benefit, a bit of a word term to use in this context, but for us it had also opened up opportunities that otherwise wouldn't have been available to us, like clients that would be looking for funding at the moment that otherwise wouldn't have been looking for funding, or advising clients on restructuring of certain parts of their portfolio or their financing. I think talking about the short term, the key concerns that we would have is that mandates or projects that we're involved in may be delayed or suspended because clients have to focus on other priorities. And in the medium term, what we consider as an issue possibly is that the government funding that is now being provided to operators in the market could possibly harm the competitive landscape, and therefore private operators, which are an important client base for us. If the competitive landscape decreases, that could impact us in the longer term. But overall, I think what Shaun was saying about his clients and his portfolio, that's exactly what we have heard from the market with all our clients that we've spoken to and other parties, that it's, even though a very quick drop in March, April, it has come back pretty quickly, especially on the freight sector, obviously not on the passenger side. But
thank you, Bart. Thank you. That's obviously also a very helpful response. Olivier, would you like to add your point of view as well?
Sorry, I was trying to speak, but my microphone was muted, so it didn't help. And surely I was saying that I concur with Shaun's view that long-term consequences are going to be positive because freight is going to develop. We usually divide our portfolio in 5 different categories. The first one is the one that Shaun knows the best. It's the regional passenger trains, where traffic risk is generally taken by the PTAs, and therefore there's no concern at all for us financiers in that space. However, having said that, if you look at the credit metrics of the operators, whether they are Keolis, Transdev, Abellio, or whoever, in H1 2020, they're pretty poor. And S&P did a very good credit paper last week on this topic, and these guys are suffering. But on the credit side, on the assets, there's nothing to be said. Second, the category is the wagon Roscoe. There has been very limited concern in the short term, in the medium term, or even the long term. There has never been a capex bubble. There has been very, very few unemployed assets. Enterprise values of these companies were at the top in 2019, could go down after the peak of 2019, but there will be no impact whatsoever, at least we believe, on the lenders and the bondholders. Smaller players which are not investment grade and who do not have access to the capital markets may struggle more, but globally I think this market will continue to develop and is pretty resilient. On the locomotive market, I think it's been a very buoyant market in recent years. However, I do believe that the market was already weaker before the pandemic, and there had been too many orders, or there had been some machines that were idle in the market, which did weigh on the global employment and the lease rates. Customers of these lessors are not as strong as the PTAs or as the large incumbents, and therefore, as Shaun was mentioning, there has been some renegotiations, some push downs of the lease rate, and this market will recover. There's no doubt. We've seen that in 2008. It will be the same in 2021. Enterprise values of the last M&A transaction in that space were probably a bit optimistic, but that remains to be seen. And debt transactions that have been closed in 2020 were very aggressive. But again, we don't believe there is any major serious issues on this market. It is very resilient. It will develop. Then if you look at the fourth cluster, it's the incumbents. Here, operating losses have been massive. But operating profits or losses are not the prime driver of the obligor rating of the incumbents. The prime driver of the obligor rating, and S&P says it very well, is the state backing. And therefore, if you're a Abellio, it's going to be an A2, it's going to be in the Netherlands. If you're a Keolis, it's going to be SNCF and the likes. Then finally, one last cluster which is suffering, it's the open access private operators. This segment has truly been impacted by the stay-at-home policy and the preference for webinars as we see today versus meetings. The difference between airlines operators and private open access rail operators is that the rail operators have not been bailed out by the state yet. But then again, when the dust will settle, we will remember that incumbents are making very slim margin on regional transportation or freight, and they're making good profits and good return on the open access high-speed rail. In the meantime, these guys are burning serious cash.
Okay, thank you, Olivier. Thank you to the three of you. That's obviously a very wide and helpful view of the market. I mean, what I take from it is it sounds as if generally the message is positive, even if slightly shaded by the COVID crisis on the passenger traffic. It certainly is the most stable and resilient market in the transport industry, and I suppose it's likely to be certainly for some time in the future. Okay, so moving on to the next question, and I suppose it's a bit linked, of course. What impact has state support had on your and your customers' business? How do you view open access / private operators' ability to weather the storm? What I have in mind particularly are the differences in support between the state incumbents and the independent operators, and questions like reduction in track access fees. Olivier, would you like to take this?
Well, clearly, as stated before, all the incumbents have received very strong support from the states. This is true in Germany with a massive infusion of cash, in France, in Italy, in the Netherlands. And again, all the credit ratings of the incumbents have been confirmed over the past 2 weeks by both Moody's and S&P, and that is a clear testimony that the most important element is the underlying credit of the sovereign, because the sovereign will be there for the incumbents, at least for the time being. Then again, that is not going to be sufficient, and we have seen, and we've seen in France, and it's going to develop hopefully elsewhere, that track access fees will be reduced, and that has been allocated primarily, firstly and primarily and only for the time being, to the freight business. Open access has been totally forgotten everywhere except for Italy, because there's been a new package, and Trenitalia and Italo are trying to benefit from it. And this is something that we are thinking is not really that has not been taken up properly by the states. Regional transport operators are suffering heavily throughout Europe, and they have all raised new money and new liquidity to cover these losses. And if you look at the accounts of the big operators, they are not great in H1 2020. And they're all starting compensation negotiation with the PTAs because they thought they had low margins, but they had no losses incurred into the business. The measures that we believe that are needed are probably broader than that. Fixed track access fees need to be cancelled for as long as the market does not operate normally. I mean, for instance, a state cannot forbid travel and ask private operators to still pay and actually to bear the consequences alone of these decisions and to pay the fixed track access fees. Operators can afford floating track access fees, but certainly not the fixed one. And then again, in certain countries, and there is no consistency throughout Europe, the regulators require the trains to operate with a load factor of 50 or 60%, depending on what their perceptions of the virus is. And again, if you ask an operator to operate at 50 or 60%, it's going to be difficult to request that they pay the full variable track access fee, because then again, the business is not going to be profitable.
Thank you, Olivier. Shaun, would you like to give your view as well on this question?
Yes, yeah, thanks, Alexia. I think there are several themes sort of running through your question. In terms of state support, there's been a lot in the press recently about private passenger operators struggling, but who tend to actually be incumbent owned, to be honest. The recapitalisation of Deutsche Bahn, hot issue there, so is the money being equally divided? But I'm perceiving and seeing a realisation set in the PTAs that where there's a change of events that couldn't have been conceivably predicted at the time of awarding concession, then I think they are now open-minded to support that concession to the end of its term, assuming it wasn't wrongly bid or with price dumping. So I think the German rescue umbrella will help there. So I think there's going to be funds available for these private operators in the passenger sector to find a way through. In terms of open access, clearly it's got a greater risk profile because they're totally reliant when you look through the funding chain through to fare box revenue. For me, like I said, we don't have any open access assets as such in our portfolio, but I still think that these open access operators can play a vital role in creating competition. I think competition fundamentally is good, and they can drive efficiencies in the sector, whether it's open access or concession based. So I genuinely hope they can survive and flourish post-COVID, and that they will get the attention and support, which I think Olivier alluded to, in terms of support, because long term I think they are required as well. In terms of track access, particularly on, if I just focus on the locomotive freight side, again that's been a liberalised market across continental Europe for a long time, and for me the issue there is post-COVID to make sure that there is this level playing field to facilitate a true modal shift. So the impact on access charges, whether it's road or rail, it needs to be comparable across all the modal methods of transporting freight, and particularly road and rail. And if that level playing field can be levelled, track access charges are a key element to that, certainly within COVID, but clearly post-COVID as well.
Thank you, Shaun. Bart, would you like to add something to this?
Yeah, I think enough has been said about track access charges, so I won't start on that. But maybe just to give a bit of a contrasting example to what Shaun said about the private operators, for example, in Germany. In the Netherlands, the support of the passenger operators is done nationally through the Ministry of Infrastructure. And they're actually treating the incumbent Dutch railways the same as the private operators, even if they are, as I said, like eventually also incumbent owned, be it by another country. And the government has made available up to 1.5 billion euro for 2020, whereby the operators can recover 93% of their fixed costs. And that package extends well into 2021, where another 740 million euro is available. obviously 93% is great, because that still leaves a bit that needs to be funded by themselves. So if this continues and the passenger numbers don't bounce back, that will ultimately have to lead to some sort of reduction on their end, whether it be in services or otherwise. But yeah, I think that here they were treating both the private sector and the public sector fairly equal. The only sector that seems to have been really forgotten is the freight sector in the Netherlands, as I haven't read anything about the government making any support available to them for the moment.
Okay, thank you. Well, the Dutch example seems to give some hope, but it does sound from what you're all saying that there is still some way to go in order to reach parity and a level playing field between private operators and the incumbent. And I suppose the COVID crisis may have exacerbated this issue. This will obviously need to be ironed out in some, if not all, jurisdictions in order for private operators to grow into a market which is historically dominated by one player. Okay, thank you. So I think we turn to our last question. So we're perfectly within the time, which is great. So the last question is, what are your views on longer term strategy and how best to be positioned for the future? Is your long-term strategy changing as a result of the pandemic? And are there other factors to be taken into perspective? Bart, would you like to talk to this one first?
Yeah, sure. Yeah, I think obviously like our answer will be a little bit different from what possibly Shaun and Olivier are going to say, but I think what we will more do is focus on future-proof, environmentally friendly assets, and focus also more in our advisory on new types of real finance structures, which are more proprietary and specialized for a specific situation rather than wholesale standard products that are already out there. I think for the longer term, we think the real industry, as it's been said before already, may actually benefit from the pandemic, and as a consequence possibly need more private financing due to limited public sector budgets, which will reinforce our present approach on financing and asset management for investors.
Thank you. Olivier, can I ask you what your view is on this?
Yes, I certainly share the view of Bart. We definitely believe that rail is a key growing segment in the transport needs of tomorrow. We believe that rail should benefit from the shift towards greener transportation means. And what we are going to focus on tomorrow is greener assets. Our bank is going to focus more and more on greenhouse emissions of all transportation means. And therefore, we will prefer going forward for environmental reasons and probably also for asset risk price, greener asset, hydrogen, battery, trains versus diesel locomotives or DMUs. On the open access deregulation, I think as mentioned, there will be some very significant investments that we are very keen to address. We tend to believe that competition will push towards more standardization of the products, which is, by the way, not sufficient at all for the time being. Ultimately, as lessors and financiers, we need the assets to operate throughout all the European corridors. Our belief is that the ultimate consequences is that there will be less manufacturers on every single product niche. Financiers in a fully deregulated market scarcely want to be the guinea pigs of a new product, and certainly not on our side. We also invest today significant time and resources into green urban mobility, so the local transportation, and we believe this will be a growing market, and that is the market where we are very focused for the time being. Finally, we need the manufacturers to be much more stakeholders in the cluster and just not push the assets into the market. They should replicate the visions of the aircraft manufacturers, and they need to support the cluster, and they need also to start pushing to the states towards signing the Luxembourg Protocol, helping demonstrate that aircon in the trains is sufficient for COVID, etc., etc. These guys are key stakeholders, and they need to be much more vocal.
Agreed. Thank you, Olivier. Shaun, would you like to give your view as well?
Yes, I mean, I guess very, very simply, I guess our long-term strategy post-pandemic remains unchanged. We'll continue to invest and expand the asset portfolio driven by the pace of the fourth railway package liberalisation country by country. One interesting, that's in the passenger business, in terms of just stepping up from the market, one interesting thing I just want to float, if you like, is that through this pandemic, I think our sector will be recognised as a very stable, resilient. And when you look at which sectors are going to attract infra funds, they may look at this sector with hindsight and in the years to come and say, you know, traditional infra-like or infra investments have been, you know, water companies, things like that. I think given the resilience that this sector has been demonstrating through the pandemic, I think that will cause investors to re-look at the sector and perhaps reappraise it positively in terms of how solid an infra-like investment it is. So I think long term, that should have a positive impact in terms of attracting funds and investment into the sector in general.
Thank you. Well, it certainly sounds from what you're all saying that the outlook for the rail industry is positive. And also with its image having actually probably benefited from the current crisis. It's obviously an industry which most governments now wish to focus on particularly. Certainly we see that in France. And we also know, as you say, Shaun, from experience, that it's a stable and a resilient market, and there's clearly scope for growth and also clearly with greener assets. So I think we can safely say that the picture is pretty positive and optimistic. So that's positive. It's good to have that sort of message in this market. Very good. Just before we've got. Sorry, I'm just looking at the time. It's perfect. I am just taking my chance to see if Arnaud is on the line, just to. Maybe just to get his view on that first question, which we're going to talk to. Yeah?
Yes, I'm here. Yeah.
Brilliant.
I am.
Very good.
No, just, thank you. Just to complement and to finish on a positive note, and just to so that we all try to be optimistic. And as regards the French market, I would just like to draw your attention on a more legal aspect. The concession and the concession scheme, which has been chosen in France as the contractual format to be entered into by PTAs with a rail operator or concessionaires, is a very well-known type of contract. It's been practiced in France for decades, or if not centuries, and it allows under well-established conditions for subsidies to be perceived by the concessionaire. So what we have here is a well-known contractual framework, which has been practiced by public authorities and also by private operators for a long time. So that's I would say a good news. And maybe and to finish on this, and one thing we could put the emphasis on is also the role of the historical operator in France will be, and on two particular points, which are the transfer of data regarding the past operation of the lines, which will be open to competition, and also the transfer of the employees to be used by the new concessionaire and the new operator. These are sensitive topics, certainly, for which we have here as well a well-defined legal framework.
Thank you, Arnaud. Yeah, clearly the transfer of employees will be an interesting subject. It's always a very passionate debate in France. So to be seen how that's going to be dealt with. But yeah, thank you very much for your contribution. So I think that brings us to a close in terms of the questions that I wanted to raise. So many thanks, Bart, Olivier, Shaun, and Arnaud for having accepted to take part in this webinar, in this first rail webinar for us, and for your extremely useful insight into these topics. We have, sorry, I will check the time. We've got a couple of minutes to answer some questions that we have received from the audience. Unfortunately, we probably won't be able to answer all of them, but of course, I think, as Frederik mentioned, we'll revert after the webinar on each of the questions that have been raised. So just taking, I think, maybe one about the future again, and maybe we can start with you, Shaun. Do you anticipate significant new build orders in the coming years? On the one hand, we're seeing significantly reduced passenger numbers and freight volume, but are these potentially balanced by digitalization and environmental concerns and desires to upgrade the existing stock?
Thank you. I think in short, yes, and for all the reasons we've probably discussed previously, I think in both the locomotive and the passenger markets, I think that there's lots of opportunities. And when you amplify that across different countries through the liberalisation process, and also the alternative hybrid, alternative drive trains that are coming along as well, I think there's a significant new build pipeline there. Slightly delayed, I guess, because of the COVID. I think the fundamentals long term are still there. And again, I reiterate, we're in a long-term business, and if we need to look forward, wait for the fourth railway package and that to kick in. And hopefully it will kick in different countries, different time scales, because otherwise it'll be too big a bite to eat in one mouthful, so to speak. So yeah, I'm pretty excited and confident that the future is going to be positive with new build orders. But also, let's not forget the refurbishment programs to facilitate the used rolling stock to continue beyond its normal life and extended life as well. So that's an investment in a different sort. But I think the combination of that is quite positive from where I sit.
Thank you, Shaun. Olivier, do you have the same positive outlook as Shaun does?
Yes, certainly. I think there will be some. Again, I think we've touched base on that. There will be some significant investments in various clusters. It's going to be much more focused than in recent years, and it's going to be much more greener than in recent years. So that's probably what I would add.
Thank you. Would you like to say the final note?
Yeah, sure. No problem. I think I agree with both Shaun and Olivier. I think there's a huge potential for the coming years, especially also if you would take into consideration that if things were to go back to the way they were before, and open access becoming more and more important in Europe, that's a whole market that is still in need of rolling stock. So I already see like a large potential just in that area. But definitely also, as DB, for example, has proven by ordering or concluding a framework agreement for 400 locomotives with Siemens this summer, and ordering already 100. There's in all sorts of sectors and segments there is a need for replacement. So it'll be interesting times, the years ahead.
Thank you. Positive again, which is great. Maybe just one last question that has literally just come in, and maybe this is one for you, Shaun.
Yeah, I've seen it. Thank you. Yeah.
if you're happy to answer it.
Yeah. Shall I read the question as well, because I can sort of lead in then? But there's a question. So that as the market prevails, what's the risk of private operators or PTAs seeking to renegotiate lease payments for unused rolling stock as a consequence of a decrease in patronage from COVID-19? And I guess, funnily enough, I was asked this question only yesterday during our annual cycle review with Fitch, the rating agency, so I feel qualified to answer it straight away. I think the comparisons with the UK sector, and we're primarily a German-based passenger concession rolling stock lessor, and in the UK, I can see it's a bit easy, a bit targeted. You've got one PTA, DFT, you've got 3 or 4 big Roscoes, and the concessions are extremely big. So it's very easy or easier to target those and see what's what. In Germany, it's different. I mean, the German government has already committed a slug of money for the rescue umbrella, so that's going to help as well. But also to get around the plethora of smaller concessions, a lot more operators. So I don't think that's going to have a read through into ultimately the lessors. And again, I think ultimately the passenger numbers are going to increase, and the contracts in Germany tend to be predominantly gross contracts, so the operators have got very little or no revenue risk, and therefore the burden lies with the PTAs in that respect. But I'm sensing no pressure whatsoever in terms of renegotiating these payments, and to do so on a pan-German basis, given the plethora of concessions, operators, contracts, it would actually be possible either, I don't think. So I see the risk extremely low in that sense.
Thank you, Shaun. I hope that answers Gianluca's question. Obviously, if there are any other follow-up questions, we'll be happy to answer them separately, which I think we've gone over the time, so we'll probably bring this to a close. So thank you again to you all, to our panelists and to the audience. And I'll hand over to Frederik for the wrap up. Thank you.
Okay, thank you, Alexia. Thank you again to all of our speakers, and thank you to you, our audience, for taking the time to join us today for a discussion on the evolving rail landscape. If you have any further questions on today's topic or anything else related to rail, please feel free to reach out to any of us or to the speakers directly. If you dialed in to the webinar, please email events@wfw.com so we know you attended. Tomorrow, you will receive a follow-up email which will include the slides, a link to some relevant articles, and a short feedback survey. Your feedback is very important to us to ensure that we're delivering events that are relevant and engaging. As mentioned at the start, this was the first episode covering rail, and we have one more episode taking place next Tuesday where we will be discussing private investment in rail. If you have not already registered but would like to do so, please email events@wfw.com. For more information about any of the episodes in the Transport webinar series, please visit our website. Thank you and goodbye.